Okay, so in this video, I'm going to show you how to draw your micro levels on a 1 hour chart. And then after you draw your levels, you are going to go down to the 5 minute chart or the 15-minute chart to look for trades. Okay, so let's go to how to draw the levels. Okay, so let's go here. Okay, let's go here. So we broke this trend line. Look how it's shooting down right here, guys, right? Now we know there's a lot of force behind these levels. Now I only probably want to look for shorts, okay? Okay, I only want to sell the market. So the best way to do it is, since we made a new low right here, okay, you want to take, you see these swing lows. So every time the market goes up, down, up, down, these are swing lows right here, and these are swing highs. Okay, I don't care if it's one candle. Notice how we have one candle. So the market went down and it went up and it went down again. This one candle is a swing, all right? So we're gonna use these swings, swing lows and swing highs. So notice how we broke this right here. We made a new low right here, and we want the market to pull back to these areas right here. The swing low right here or the swing high. Okay, so how are we gonna draw these levels, all right? Basically, you're going to go to the bottom and draw the level like this, okay? Now, you can go to the lowest one, which is right here, okay? This swing low right here, okay? And then you can go to the next one. The next one is, so this is the market that you're looking at right now, right? Okay, so if the market is going up right here, the next level is what? Is this level right here. Is this level. So this is how you're going to mark it down. Now, let me tell you how I mark mine down. I mark it based on the body of the candle, okay? I mark it down. So let's say that, okay, the market is going down right here, and we're going back up, and we're looking for a level. You see how this is the lowest low right here? I'm going to take my my horizontal line, and I'm going to put it at the body of the candle. This is the wick. You see the wick is the line, all right? I'm putting it at the body of the candle. Now, let's say the market continues to go back up. I'm going to put it at the body of the candle first, okay? I'm going to put it right here at the body of this green candle. See, because we have a wick right here, okay? So I'm put it at the body of this green candle right here. And then I'm going to have another one at the top of the wick, okay? So I'm going to have, usually I have two. At the wick, at the body and at the wick, okay? And that's how you draw your levels. Most people don't know how to draw the levels like that. So this is how we do it. We draw it at the body or the wick, and we wait for price to come to these levels, okay? And then we're gonna look for our entries, okay? This is how we want to mark down our charts. We don't wanna go back. I see a lot of people there's nothing wrong with that. If it works for you, fine. I'm not saying that it doesn't work. But I do see a lot of people will go back, 3 months back, 4 months back, and they say, okay, this level hits, that level hits. Okay, so this is a support and resistance. I'm gonna draw my support and resistance here. So let's say they say, okay, a touch right here, a touch right here. Okay, let's put my line right here, right? Guys, we don't want to do that. This is where things can get a little fishy or inaccurate. I want you guys to have the same lines that I have, okay? This is where things get a little cloudy to the point where, okay, this person has a different line than I have. I want you guys to have the same lines that I have, okay? I don't want you guys to make no mistakes. The best way to do that is to look at the recent price action. From my experience, okay, price reacts to the recent price action. Doesn't really care about what happened 3 years ago. I'm not saying that it won't or it can't. I'm just saying that from my experience, the recent price action is way better, okay? So let me show you another example on how to draw the micro levels. So this is NASDAQ. So I wait for 9:30. So let's go to this right here. So we're waiting for the market to open. So this is all we see right here. Now, what do we see? If we go to the line chart, every up candle is a pullback, okay? Just like I drew those swings, okay? Every up candle is a pullback. It might not look like a pullback because it's tiny, it's a micro, but it's a pullback. Okay, you just need one candle. So we're looking for the closest swing highs and swing lows. So we are right here. We're looking for the market to open. We can mark down this high right here because this is a high. We went up, we pulled back. So let's mark down this high right here. Okay, so we can do is we can mark down the high, and usually I do. Let me zoom in a little bit. I usually mark down the wick and the body. Okay, actually this is the high right here. This is the highest point right here. So we're gonna mark down this. So this swing right here is the highest. So we mark down the high right there, and then we mark down the body of that candle. Okay, now if price pushed down, where's the next available swing? It would be right here. Okay, this red candle. Remember, the market went up, it pulled back and went back up again. Okay, we just need one candle for a pullback. So this available swing, okay, is the next area. Now after that, where's the next area right here? Okay, we can say this is the next area right here, but to me, I'm looking at this, and I would say this is very close to, this level is close to this level, so I don't really need to mark down this level for the most part. Okay, especially if you put a level at the wick. Okay, sometimes I don't put a line. You could do it if you want to, but sometimes I don't even put a line at the wick if the body, and the wick is very close. So this is a tiny wick, so sometimes I just leave a line at the body, and this, it is what it is. But you can actually, if you want, if it makes you feel good, you can actually put a line at the low of the candle in the body. Okay, now to me this is very close to this level, so I'll probably just leave it. So the next available swing, if we continue to go down, is what? This, guys, this right here. It's very, very simple. Okay, I put it at the low of this body of the candle. Okay, and then I put it at the wick of the candle. Okay, the low of this wick, and that's it. Now let's say price shoots up. Where's the next available swing high? Okay, remember we're looking for the closest. Now you can say, well, this is the next available one, but it is. But these lines match up to this, so we don't need to put a line right there because it's matching up. Okay, so it's very close. So the way I'm looking at this is my next available level will be right here. So I could put one right here at the body. Remember, at the body of the candle, and you can put it at the wick. Okay. Sometimes if the wick and the body is very close, I just leave it at the body. Okay. Now let's say it shoots up, it continue to go up. Where's the next available area, guys? This right here, right? I'll put it right here. So the market went up, went down, went up, went down. I'm sorry, it went down and went up, down, up. Okay, so I'll put it right here. This candle right here. Okay, and then I'm quite sure the market is not probably going to go up here, but let's say the market did go up here. Yes, I'll put it here because this is the major swing. So if we are at a major swing, I will use that major swing. Okay, so when I mean major swing, I'm talking about these deep pullbacks. So let's say I was trading this day right here, and let's say price was actually at this major because we have a big up move right here. So this is a major swing. Okay, if price was at this level and I'm trading that day, yes, I will mark down that level. Okay, so let's go to another day so you guys can understand this concept. Okay, so let's go to the next day. The next day, 9 o'clock. All right, so let's zoom in a little bit. And remember, we don't have this candle yet because the market really didn't open. So I want to basically look at the level. So if the market goes down, where's the closest available swing low? It's right here. Okay, right here. Okay, now price is at the body. Now you can put one at the body right here. Okay, so if price continues to go down, where's the next available one swing low? Right here. So if price is going down, I'm usually putting it at the low. Okay, at the low, because most likely it's bearish, so it's giving you enough space to play with these lines. So you can put it at the low of this swing. So the market went up, pull back, this swing right here. You can put it at the wick too. And that's it. Now, if price goes up, where's the next available swing? Right here. At the top. Okay, remember, the market went up, pull back, went up, pull back, went up, pull back. This is a swing. Right? I'm going to do one more so you guys can understand this. Right? So let's do the next day. Okay, let's right here. Right? So we didn't have this data at 9 o'clock. All right, so we didn't have this right here. So my levels would be, okay, if I didn't have this, I will mark down this. Okay, because if price pulls back, there's definitely a level right here. That swing low right here. Let's say if price continues to go down more, do we have a level? Yes, we have a level right here. Okay, this swing low. Why is that? Because price went up, it pulled back and went up. So this is a swing. So you can put it at the body, okay, or the tail right here. All right, so if price push up, where's the next available level? I will put one, because remember, we went up, we pulled back. We went up, there's one candle right here, so I'll put one at that one candle. So I'll put one, since we went up like this with one candle, I will put one at that low of that candle, okay? And you could put one at the body, but honestly, it's kind of close. So what I would do, I'll probably put a line right here, okay? And then I'll probably put another line right here, because I don't want to have too many lines on my chart too much, okay? And that's it. Now let me show you guys something real quick. Let's say that price breaks a level. So let's say that this day we're trading right here and breaks this level, and we don't have no level to the left. What do? We don't have to do anything. Okay, we just let price run, because usually when you see this, we don't see nothing to the left. That usually means that it's going to be a very bullish day, and it's just probably going to go up and up and up and up. So you just basically go with the trend, and that's it. Because honestly, you don't want to go so far to the left just because you're trying to look for a level. If there's no level, honestly, the closest one is right here, because we at this major swing high, and we don't really have no micro swings near us to the upside. We do have one to the downside. So let's say that if price, let's say we traded this day, if price pulled back, we would use this level right here. Right? The market went up, it pulled back. That red candle is a pullback. That's it. I'll put it at the top of that red candle, and I'll wait for price to pull back. Okay, and I'll put it at the bottom. You can put it at the bottom. This candle is small, so you don't really have to put it at the bottom. But if you want to, feel good, you can put it at the bottom. Because if you look at it, if I put it at the bottom, these lines are pretty close. But whatever, you can put it at the bottom. And you're looking for that pullback. Now let's say it breaks that. The next available swing would be this red one right here. And that's it, guys. This is a bullish market, so you definitely want to put it at these tops and lows. And you definitely want to mark down this major swing high. But it broke that swing high, and guess what? It kept going, so that means that most likely it's going to be a bullish day, and you just most likely look for longs, and that's it. So I hope you guys understand. You're looking for a price, right? You're looking for the closest swing high and swing lows. So that's it when it comes to marking down your charts. The next one, we're going to talk about entries. We're not really going to get too deep in entries, but I'm just going to go over a few examples and show you guys how to enter, okay? But, in the course, you will have all the entries, and we'll talk about, how to enter, okay? So that's the next step. So let's go. Now, you're going to use either the 5-minute chart or the 15-minute chart, whatever you want to use when you're trading this 1 hour strategy, okay? Now, the candlesticks that I use, I pretty much use the tail bar, engulf bar, the solid bar. I use the engulf trap, and I use the can't close. All right, so those are the candlesticks that I use, and also I use if I'm trading this, I'm using consolidation breaks. Okay, so if it's a triangle break, regular consolidation break, like a horizontal one, or just a wedge break, no matter what break it is, I'm using it. Okay. Now, basically, let's go to this chart right here, which is the US 30. We are going to jot down a level. So this is, I believe this probably was Friday. Yeah, it's Friday right here. So let's go to, okay, a level. And what I see here, right? So the market is going down. So what I'm gonna do, I'm gonna put a level right here and a level right here. Now we can actually put a level right here because it's a low right here. There's nothing wrong with that, okay? So let's put a level right here, okay? And we don't even have to put a level right. I mean, it's close enough. These two levels are close enough, so we don't have to put it here. So we can just leave this level right here, and then that's it, okay? Now let's say that US 30 was, going up more. The next level will be right here. All right, so we'll be right here. All right, so let's say that US 30 popped up to here. This would be the next level. So we basically just, for the most part, you're just plotting a couple of lines on your chart and you're waiting for a price to get there. Okay, this is why I told you guys to use this strategy first to build your small account, because it's very simple. You don't have to overthink. Okay, you just wait for price to go to those levels. So let's go to the 5-minute chart. All right, so what do I see? The first touch right here, I see a nice tail bar closing at its low. So definitely we're getting this trade. You at least got at least 2 to 1 out of this move right here. Okay. Another pop right here. It can't close above this high, so I would try this one, but it didn't go that far. Probably give you a 1 to 1 and you get out break even. Now it went to this second line right here. I'm starting to see a pattern. So I'm starting to see some type of wedge going on right now. So this right here, okay, would be a wedge right at this horizontal line. So I will go short right here, okay? And this one I will try to hold at least minimum to this bottom right here, because we're probably going to find some type of support right here. Okay, so minimum I will hold all the way to the bottom, okay? So this would be a nice trade to the downside. And that's about it. I mean, this is late in the day, even though it reacted nicely off these levels, but still it's late in the day, right? So just giving you guys a quick view on how I would trade these levels when price would get to these levels. So let's go to another example. Okay, so what do we have here? We have a trend line break, okay? And we want price to make a higher high. So it popped up, it pulled back, now it made a new high, okay? Now the reason why we wanted to make a new high, so we can have a base, so we can have something to, plot our level. So we have a horizontal right here, okay? We go to these levels right here, and then we go to the low right here, okay? So those are the two levels we can actually look at, and then we can look at the top two. So let me put a level right here. So we can look at this level right here too. So those are the three levels we're gonna have on the chart. So let's go to this date. This date was February 18th. Okay, let's go to 5-minute chart. Okay, so what we have here, we have the market going down. Okay, this is a decent sized bullish bar right here. I will go long right here, and guess what? Got stopped out. Guess what? Who cares, right? On to the next one. You know for a fact that every trade is not going to be a winner. We don't care, because a lot of these trades will go, far. So it will go 3 to 1, 2 to 1, 4 to 1, 5 to 1. So we don't really care about a loser. Now the next trade, okay, would be around here, right? But you don't want to take a trade right here. Why? I want you to pause this video and ask yourself why I don't want to take a trade here. Well, I hope you guys, got the correct answer. Basically, if you look to the left, okay, we go over this in the course, okay, we look to the left, what do we have? We have resistance, okay, it's left shoulder resistance. We don't want to buy right at the left shoulder resistance, because there's a strong possibility as soon as we buy, okay, let me put a line here so you guys can see. Okay, as soon as we buy at that left shoulder, let's say we bought this pin bar right here, right? As soon as you bought right here, guess what? Resistance, boom, stop you out. So you don't want to buy near resistance, all right? Now, it came back all the way to this low right here, okay? And guess what? It gave us nice two tail bars right here. Lovely. Remember, you guys stopped out right here. So this trade right here gave you all your money back plus some. All right. So that's why you don't worry about losers. Right. So let me show you guys another example. Okay, guys, remember this correction right here. Okay. I want to show you guys this pullback. So let's go to that 5 minute. Okay. So remember, it came right back to the 1 hour swing high. Right. Now, if you was in this trade right here, it definitely gave you a nice bullish bar right here, right? Not only a bullish bar, it was a nice engulf bar. And not only that, if you look at it close, right? Look at it and you notice that it can't close below this low right here. So this was the low. It pulled back a little bit and tried to make a new low, but it can't even close, right, below this candlestick. So buyers bought this up. This was a nice candle to go long. And guess what? Okay, if you see this, guys, and you understand that the 1 hour chart is making a flag pattern, okay, I want you guys to not be afraid to hold for the breakout. Think about this for a second, guys. If you caught this bottom right here, okay, and you know just by looking at the 1 hour chart that this is a correction right here, right? A correction. And you know that if it breaks this flag pattern, right, we can have a crazy run to the upside. So imagine you buying this and you getting all of this right here. Okay, this is why I want you guys to focus on this strategy, because it will help you build your small account. And all you have to do is just wait for price to come to these levels and you trade, right? I'm tired of seeing you guys try to figure out the 1 minute chart. So I want you guys to focus on this. Okay, you can actually get a lot of big winners just by understanding price action. Most traders that I know, they want, if they bought this right here, they probably maybe get out right here. Okay, nothing wrong with that. But if you understand the bigger picture, understand, the whole picture, you could tell that this is a correction. You could tell that this is a possibility of a flag breakout. You could hope for this big winner right here. This winner right here would basically put a lot of money in your account. Number one, it would give you cushion, so you don't have to worry about losing. Okay, so even if you take a loser here or two, you wouldn't worry about that because you have this big winner. Okay, to help you, grow your account. So let's go to the next example. Okay, so let's go to this example right here. This is the British pound. I actually took a trade on this Friday, so let me go to that example. Now, overall, the picture is up to the overall trend is what? Upside, right? Especially on the 1 hour. But we don't care about the overall picture because guess what? We're just trading these short-term trends. So you can tell that it broke a trend line, okay? And now we are looking for that move to the downside. So what I saw, okay, was this right here. I saw, let me see the levels. One level right here at this swing low. Remember the close of the swing low. Another level right here, okay, at this, because when I was looking at the chart, I'm trading around 9 o'clock. So this would be the market is pushing up. So this next level will be around here, and this level right here lined up pretty much close to this swing low right here. Okay. So I didn't really need two levels because pretty much it's the same area right here. And then I had another one at this high, this swing high right here. Okay. So at the close of the body and at the high of the body. Okay. Now, I went to the lower time frame. So let's go to the 5 minute chart. So I didn't take any of these because the time I'm trading, okay, I'm trading around 9 o'clock, 9:30. Okay. So what I'm looking at here, okay, I missed this trade, so I didn't get in this trade, but I got in this trade. So let me show you why I got in that trade. But this trade is actually, if you notice how price came to the level and it couldn't close, I was still getting this trade right here. I'm going to tell you why. Because it's very close to the level and it can't close, okay? It can't close, so I would definitely get in this. Notice how this candle right here can't close above this high. So we was going up, we pulled back, and we tried to make a new high. This candle can't close above this high, so Me personally, I would definitely get in. I would try to get in the next available candle, which is this candle right here. We went below this candle right here. I would get in, put my stop loss above here. Okay, that's because it can't close above this, and we're very close to the level. But anyway, so we came back, and I noticed right here, we popped up. Notice how we can't close above this swing high. Okay, so this candle right here can't close above this high. Notice how. So let me show you so you can see. Right, if you can't see this, I'll draw a horizontal line. This candle right here can't close above this swing low. I'm sorry, the swing high right here. So next available candle is right here. As soon as we go below this candle, I'm in the market. Stop above the high, and I always my target was this low right here. Now notice how price almost came back to this candle. Okay, this candle right here, but it never came back. So I was in right here, this candle, but price never came back. Okay, now my target was this low right here. Almost came to the low, and it popped back up. Almost stopped me out for break even, but it came back down, and I got out because it was getting too late. It was Friday. It was getting too late. I don't like to hold trades overnight. That's not my thing. So got out. So that's the reason why I took that trade. Basically, straight to the point. It couldn't close. That's why I took the trade. Okay, so let me go to another example. Okay, guys, so here's another example right here. The market is going down. I will put so if I'm looking at this right here and I've noticed that the market is pulling back, I'm going to put my horizontal line first right here. This is the first level. Swing low right here. And then my next level will be right here. This would be a next level right here at the close of this candle. I mean, you can actually put it right here too, because if you notice, this is the low right here. So I'll put one right here, and I'll put one right here. Okay, at the close of the candle. So those will be my three levels, because we know this is a downtrend. So let's go to that 5-minute chart. We go to the 5-minute chart, and what do we see? I love this. I'm gonna tell you why. Okay, look how it's going to this chart, guys. You can tell this is a correction. Look how it looks. It looks beautiful. Now look at this right here. Okay, nice little trend line break, nice correction. Everything is lining up. All the highs lining up. Look how the highs is lining up. Look how the lows is lining up. Nice trend line break, and look at this. Whew! I mean, beautiful, guys. This is what I'm talking about. Okay, this is what I want you guys to do. I want you guys to basically, focus on this, because I'm tired of seeing you guys trying to play with the 1-minute chart, and some of you guys don't have experience to play with the 1-minute chart. Okay, now one thing I would say, okay, is exits. Okay, so my exits would be, especially like a trade like this, I'm gonna go for the lows, right? Now if the trade is a little bit sloppier, okay, if it looks like a range, whatever, I'm going to the next available low. Okay, I'll show you guys example, actually the last example, but this is a strong trend right here. So this type of move right here, I will probably go all the way to the low. Right now, strong trends, sometimes I will hold if it comes back break even. Okay, now if it's not a strong trend, meaning that you can just tell this is a strong trend. If it's not a strong trend and the market looks sloppy, okay, I won't hold for the break even. So let me show you guys a good example. So this is the last trade I showed you guys. Look at the price action. You can tell this is not a strong trend. Overall, the market is kind of choppy, but you can still make money. Okay, so if I'm shorting right here, I know for a fact, all right, let me target maybe this low right here, or even get out right at the bottom, because sometimes you will get a reaction, because this is a nice demand level right here. So you get some type of reaction off this level. So I target either the lows or pretty much at this demand level if I'm trading a market that looks like this, right? Even though the overall trend is down, but look at the intraday trend, or how the intraday is moving. Look at it. It's just choppy, right? So even if you got a nice short out of here, I'm not trying to look for the all the way back down to these lows. Okay, I'm probably looking for maybe back to this demand level or the lows. Okay, so keep that in mind. Okay, so look at this right here. This is a nice strong trend. We have a nice 1 hour breakout. So even if I took a trade, sometimes I would probably let the trade. Let's say I took, I don't know. Let's say I took one of these trades right here. Sometimes I'll let this trade come back to me, break even. Okay, and then if it comes back to me again, break even, I'll probably get out. But like I said, this is up to you. You don't have to trade that way. I'm just telling you how sometimes I do it. With a strong trend, sometimes I'll let it come back to me one time on a break even. But if it comes twice, if it comes back to me, a second time, I'm out. All right. But again, I'm just showing you guys examples and showing you what I would do if I'm trading the market. Again, you can do whatever you want to do. If you want to get out, break even when it hits your 1-to-1 stop. So whatever you're risking, as soon as you hit that 1-to-1, okay, so let's say you're risking $10, right? And it goes up $10. You move your stop to break even, and then you let the rest ride. So let me show you a good example. Okay, let's say that you got in right here. Let's say you got in right here, right? And you're risking this candle, and a 1-to-1 is, let's say 1-to-1 is right here. Okay, so you're risking one candle to make another one candle. Okay, now if it comes back to you, you have to decide, okay, should I get out, or should I just get out for break evens? But in general, once it goes up 1-to-1, you move up your stop loss. Okay, so this goes up 1-to-1, you move your stop loss to break even. Break even is basically where you enter. So this right here, your entry, as soon as price goes above this entry, this bar right here, that's your entry. Okay, so your stop loss is above here. Now, as soon as price goes 1-to-1, you move your stop loss to break even, which is your entry. Okay, move your stop loss to break even, which is your entry, and then if it comes back, you get out for a break even. Okay, so let's go to another example. Okay, so let's say that you're looking at price this day and it's going down here to this 60-minute level. Okay, now basically, if I'm watching this day right here, I will have two levels. All right, I will have this level right here, this level right here. Okay, oops, it's not even going. This level right here, and then I'll have this level, because this is a breakout. Okay, so we'll definitely have this swing high right here. Okay, and that's it. Okay, now I will count some of these levels right here. Okay, but the main level I'm looking at is this breakout level right here, the swing high right here. Okay, and you can put some of these levels down to see which level it reacts to it. But these levels are so close, sometimes I probably won't even put it down, but you can put it down right here. Now let's go to that one, 5 minute. Okay, so let's say I was watching that market this day, and it shoots down. Notice how it didn't react to none of those levels, but it reacted to that last level, which is that major breakout level, and it gave you a little consolidation going on here too. So you can take this little consolidation break. Now, let's say you took this breakout, where you would put your stop. You would put your stop below the breakout. Okay. Again, if it comes back, give you a 1-to-1, it comes back to you, you can get out, break even. Okay. Or if you feel like this is a strong trend, which is, intraday wasn't really a strong trend. Overall, it's decent. But intraday, we've been going down, so I wouldn't say, this is a strong trend. But what do I see? I do see demand. Okay, so you will have a lot of demand or supply levels around these 1 hour key levels. Okay, so we do have a nice demand right here. Okay, so this is where you can actually incorporate supply and demand. When you see supply and demand, it comes back to it. It gives you a nice bullish bar right here. So even if it did came back with a break even, let's say you got in right here, this breakout right here, but you came back break even, who cares? A lot of times we give you that second try. Okay, and guess what, guys? Look at this. Okay, I mean, we're talking about, this is giving you a nice upside, guys. Look at this. Beautiful. Okay, you can target this left shoulder, and it came right to that left shoulder right here. We had the head, left shoulder. I mean, this is beautiful, guys. So don't be scared of break evens, and don't be scared of getting stopped out. You know, because you're gonna have winners like this. It's gonna take care of all your losers, plus put money in your bank account. Okay, so this is the whole idea with this strategy. I hope you guys practice this. Make sure you watch this video over and over and over. Now let's talk about basically, you know, getting stopped out. Now, sometimes if I get stopped out, I will try, you know, again. Okay, I'm not gonna try 3 times, but I usually try twice. So if I got stopped out and it gives me another, you know, good entry, I will get back in. All right, so keep that in mind. Another thing, you know, with these exits, minimum, you should be looking for a 2-to-1 minimum. You know, you shouldn't be just getting in and looking for a quick 1-to-1. No, these are, you know, high quality levels, and they levels off the 1 hour. So you can minimum get a 2-to-1. Okay. But you still have to look at the structure and look to see if you got room for maybe 5-to-1 or 6-to-1 or even more, because this one went up to the left shoulder, but notice how it just kept going up. Okay, it actually made a new high to this high right here. So you had to keep that in mind. Like, a lot of these trades, guys, could be, you know, crazy winners. Look at this. This thing went up all the way to here. So you have the possibility to make a lot of money from these trades. So keep that in mind. You just don't want to go for a quick 1-to-1. But overall, look at the whole structure. You just don't want every trade, because I see some people, you know, they have a stuck mindset where every trade they're looking for a big winner. You can't do that, guys. You have to look at the structure of the market. Okay, I told you guys before. If the structure looks choppy, then go for those maybe 2-to-1s, 3-to-1s, whatever. But if you understand the structure and you understand you are in a trend and it's breaking out, or this is just a pullback and you taking advantage of the pullback, you can hold for big winners. Okay, so keep that in mind. Okay, guys, so here's one more example. This is the trade I took on Friday, NASDAQ 100. Basically, we had this trend line break. We pulled back, and then we made a new high. When we made a new high, I plotted my level. I had my level right here. So let me show you that. So basically, I had a level right here. Let me actually move that up at this close of the candle. Okay, and then I had another level. At this low right here. Okay, and pretty much I was looking for possible longs. Put a level right here at the high. Let's go to the 5-minute. Okay, so even if you did put a level right here, guess what? You took a long right here, right at that left shoulder resistance. You got stopped out. So you have to keep that in mind, guys. You don't want to go long right near support. So it don't matter. It didn't really. So this trade didn't matter anyway, because it didn't really give you a good setup. You are right at that resistance. Anyway, it came back down, and I'm gonna show you guys what I saw. I have a. Let me show you. Zoom in so you can see. This was an engulf. So this candle went below this candle, and it came right above this candle right here. Okay, soon as it did that, boom, money in the bank. I probably could have, you know, held all the way to here, the top, but I got out at that left shoulder just for quick profits. Okay, but minimum, I probably should have went at least right here to this level right here. All right, but overall, that was the trade. And if you go to the 1 hour, okay, this was a nice level. Okay, a lot of retail traders can't catch this. You know why? Because a lot of people are teaching them wait for the price to go to the low, right? All the way to the wick of the candle to the swing low right here. Okay, price didn't even reach that. Price didn't even go to that swing low. It went to the body of the candle. Okay, it went to the body of the candle, and then it rejected. So a lot of retail traders miss out on a lot of trades because they think, okay, once we, you know, go below this candle right here, that's when I'm going to get in. Okay, no, you put your level right at the close of the candle, wait for price to get there. A lot of times you will see price react off of those levels. Okay, so make sure you guys Make sure you guys take notes, because some of you guys look at this course and don't take notes at all. Take notes, guys. Write down your notes. Be prepared and trade this, okay? Because this will help you build your small account, and it will help you, just be patient. Some of you guys force trade. Some of you guys trade too much, over trade. This will help you just relax, wait for price to get to these certain levels, and then boom, take these trades. All right, so let's go to the next video.